So most people think a good property deal is all about price. But in reality, price is only one part of the equation when it comes to property. So in today's video, I'm going to walk through exactly what I look for in a good property deal in the UK based on real world investing experience that I've got for over nearly 10 years now. Before I even think about making an offer, these are the steps that I take. Let's get into it. So Craig Parker here from Parker's Property Sourcing, just coming at you with another video. And in today's video, I'm going to be running through exactly what I do when I'm looking at a property deal. So first things first, strategy comes first. The first thing I look at is what the strategy is. As I've told you before, my strategy at the moment is just boring vanilla buy-to-lets. Until I get a real good foundation of probably between 10 to 15 properties, then I'll start experimenting on other stuff. But for me, my advice to anybody that's getting into property, when you're looking at a deal, firstly, you've got to work out what is your strategy. Is it buy-to-let? Is it a flip? Or is it a development? A good deal for one strategy can be a terrible deal for another. So we've got to make sure that we're aware of this. If you don't know your strategy before you buy, you're effectively gambling rather than investing. And we're not here to gamble, we're here to invest and make money. So once I've worked out what my strategy is, which for me is always going to be buy-to-let, as I've said, for now, the next thing I look at is numbers. So what are my numbers? This is going to include the purchase price, what the stamp duty is, the refurbishment costs, what finance I'm going to need and how much that's going to cost me, professional fees. What I mean by professional fees is obviously my mortgage broker, the solicitors, surveyors, those sort of things need to be taken into consideration. And then once that's all worked out, my monthly running cost as well. I need to crunch down those numbers and know exactly what my numbers are before I move on to my next stage. So I know what my strategy is now, and I know my numbers. I know what it's going to cost me exactly to the T. And now I'm going to look at the demand and the location, which is also as important as the other two that I've mentioned. A good property deal must be in an area with a proven demand for the strategy that you're doing. And in this case, and in this scenario, this example, it's buy-to-let. So there has to be a demand of buy-to-let. Very, very important. We've got to start looking into things like transport links, amenities, schools, employment hubs. All of these things really matter. They really do. You can improve a property for sure. Anybody can improve a property in anywhere. It could be in the middle of nowhere with nothing around it. But you can't change its location. So demand and location is super, super important. So the not so fun part, but it's something that you definitely got to be taking into considerations are risks and downside, and how you can protect yourself from it. Always look at the downside risks of, your investment. What happens if the interest rates rise? When I'm working out my return on my investment, let's say, for example, interest rates are currently at 4.5%. I might work out my return on investment at 5.5%, 6%, just so I know that if they do rise a couple of a percent or 1.5%, I give myself that little bit of a buffer. Is that deal still good for me? Very, very important. What if the property's empty longer than I expected? So again, when we're working out our return on investments, when we're crunching our numbers, step 2, we need to be making sure that we know exactly our numbers. We need to be putting in void periods to work out our return on investment as well, because that's very, very important. If you give yourself maybe 3 months of void periods when you're working out your investment for your first year, again, it's a buffer. It may not happen, but it may happen. So, These are the things that you really need to be looking out for. Every deal you should have at least one backup plan and a clear exit strategy if need be. The exit strategy in a buy to let would clearly be, can I sell it? Can I sell it for profit and not a loss? You know, that is the question you ask yourself. So once you bought the property and you push the value up by doing your refurb, yeah, can I, if it doesn't work out for me and I want to get out of this deal, can I sell it for profit? Super, super important. And then just touching on can I sell it, the strongest deals usually have some form of value add potential. Very, very important. It might be a refurbishment, it might be a layout change, it could be just getting planning permission, something as easy as that, or EPC improvements. But all of these things, for me, when I'm looking at buy-to-let deals for myself and for my investors now, for me, what I look for is how much value can I add to this? Yeah, how much is it going to cost to add this value to it? And then what is going to be my end value afterwards? And as long as the what I'm buying it for and the money that I'm putting in to add the value to it, as long as that end value is greater than the first two put together, you're onto a winner. It's very important, very, very important, because relying purely on market growth is very, very risky. Creating value puts more control in investors' hands, in your hands and in my hands. We have to create value. So once we've done all those steps, we're nearly there. And, you're in a very strong position now. If you're still looking at this property, you've done all the steps that, I've just spoke about, and you're still interested in the deal, so your return on investment's good, the area is good, all of these things are working out for you and it's looking good. Before committing to any property deal, I always research the area, and I just use various different data-led tools, basically. These platforms really help remove emotion from making a decision, and it gives a clearer picture of demand, risk, and also long-term potential. They definitely don't replace the due diligence that I've spoke about in the last 6 slides, but they dramatically improve it. So it's really important. So some of these sites and tools that I use, I won't name them because you can just look it up yourself, and they're not paying me to promote their products and their services. So, until they start paying me to do that, I won't be naming them. But there are, sites, and loads of sites that focus heavily on historical sold price data, for example. They show how property values have changed over time, average price by property type, and long-term market trends. Very important, It also helps answer key questions. And key questions are, price is generally supported in this area, or was growth a short-term spike? And things like that are, they're fantastic for when you're doing your due diligence. So you can put in an area or the address of the property you're buying in these search engines, and it'll give you so much information, and it'll tell you, the last 20, 30, 50 years property growth in that area. And then you already know, if this is still looking like a good investment or not. And another thing that I look out for, is location and lifestyle data. So I've put here crime, schools and universities. It's so, so important to look out for these things and research these things, because again, you want to know what the crime rate is in that area, because that will indicate what sort of tenant you may be getting into your property. It's very, very important. Good property deals are supported by strong fundamentals. Crime levels, school performance, nearby universities, transport links, employment hubs. It's very important. These factors, they drive long-term demand and rental stability far more than short-term market hype. It's so important to pay attention and to have, location and lifestyle data searches in your property search when you're looking at one individual property deal. And just to be clear, search engines and data platforms don't make decisions for you, but they can highlight the risks. They can also confirm demand and prevent costly assumptions. The stronger property investors use data to support their decisions, like myself. I don't do any when I'm investing in a property. I don't make any emotional decisions. I literally, what I've just gone through in this video today is what I do whilst looking at every single deal for myself and my investors. And if I get to the end and the return on investment's right, the demand is high, the crime rate's low in the area, you've got good schools, you've got good universities, you've got good transport links, you've got good working hub, all of these things come into a nice ball of a good property deal. And then you're ready to then put your offer forward, and get that deal over the line. But all of these things work together. So my final thoughts on today's video is good property deals aren't found by luck. They're filtered by knowing exactly what you're looking for. When you understand your strategy, you understand your numbers, you then understand what the demand is in the area, you have a look at the risks, can you add value, the market becomes far less overwhelming and you're not forced into a deal or tricked into a deal, and estate agents or whoever's selling the property to you cannot force you down an avenue because you've done all your research, all your due diligence, and then you can stand firm and say this is my price and this is why, or you can negotiate a bit. Yeah, if you really want the deal, or you just walk away. But once you've worked out all of these things that we spoke about in today's video, you're in a much stronger position knowing that you're going into a really good investment. So again, please don't forget to like and subscribe this video, don't forget to like and subscribe. Like this video, share this video, subscribe to the channel. Really important. Coming at you with daily content at the moment. So I'd appreciate if you can just share and, share the love, share the knowledge that I'm giving. Really hope you've enjoyed today's video. I've been Craig Parker. Till next time.